Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. We have a fairly volatile morning this morning, waiting for the Fed's decision in terms of interest rates, whether to taper or not to taper, whether to raise interest rates or not, or how long. So we have a lot of uncertainty in the market today, and we want to focus pretty much on the volatility of the market here today. So let's jump right into the market here, and let's see where we are here. We're looking at gold trading $1765.30, down 30 cents, down $24.10, down about 1.37%. What we're looking here is at the Fed's decision here to influence the markets here. So we're going to have some choppy conditions here throughout the day, and we want to focus primarily on the volatility of the market here, as the market is coming into major support levels, and we want to see pretty much how the market reacts to these levels here on a daily and on a weekly basis. The silver market is trading around the weekly average, the weekly buy one level of 23.13. This is the first level that indicates about a 90% probability that if the price activates a buy trigger by closing above it and accelerating the momentum, we got about a 90%. From B2, it's 95% probability that the market will revert back to the mean or to the next level above, which is the 23.55, which is the weekly buy one level. In between these targets, we have the 23.29. And so we are trading in the area that is considered accumulation of supply. This area, mathematically speaking, is where the market could potentially revert and move up into, again, the targets above, which are initially the daily 23.29 and the weekly 23.55. The same situation is for the gold market. We're waiting for the weekly buy one level of 1767 to activate a buy trigger, a weekly buy trigger. And the market is oversold, extremely oversold, below the daily 1781 level, where the daily signal went neutral. The daily program is neutral unless it closes above 1781. The next level that we look at is the weekly, which is the next targets that we focus on that have been activated. And in this case, we're looking again at the buy one level of 1767. In general, today is going to be pretty choppy here. The next day or two, with the comments of the Feds regarding tapering, not tapering, interest rates, raising, not raising it, or when. And so the market is involved with this fundamental rhetoric in just how much this confirms the way that the governments manipulate the markets. This is a very good example of how manipulated the markets are. That, they are in a state of limbo, so to speak, until the government decides what to do with the cost of money, interest rates. It's not a free market, as the word free enterprise would like to describe it as. When you have government manipulating the markets as they are manipulating the price of precious metals, and the price of bonds, interest rates, we are not in a free market enterprise. So you have to take a look at the technicals of the market if you want to make any sense of the fundamentals, and listen to what the market technically wants to do, not what the fundamentals are telling us. And the gold market and silver market is a perfect example of an inverted market fundamentally. The price of gold and silver are tremendously skewed against the intermarket relationships that we have, across the board. I mean, if you take a look at crude oil again, near close to $90 a barrel. You take a look at commodities, you take a look at grains. We are beginning really to see a massive move up in grains, commodities, basic food prices. We have seen a correction, for example, in soybeans from a high of 1667.50 all through since May of this year, and we come down below 50% Fibonacci retracement here into this trend line support levels that you see, which have reverted the soybean market above 1250. 1240 trading right now, and coming down with a low of about 1187. I want to focus on the grains for a very, very good reason, that obviously we have this bottleneck situation still unfolding, nowhere near in sight when these ships are going to be unloaded. And so we are experiencing a tremendous pressure in the bottleneck of pretty much the availability of supplies into the market. And so with harvesting, pretty much coming to an end in certain parts of the country, particularly the U.S. here as we move into the wintertime, it's going to be very, very difficult to expect that we're going to see grains in the same fashion, that we're going to see grains, I would say, being delivered normally. So my feeling is that we're going to see a blockage or a shortage of food, which is dangerous because, food is perishable. It's not durable goods. And so we have to see how this is going to affect the prices of commodities, most grains. We're looking at soybean meal, which is a byproduct of soybeans. It's basically the soybean crush, where it produces the soybean oil and the soybean meal out of the bean, which are used for human consumption and industrial applications. And when we begin to see the price of oats explode as they have, from 283 a bushel up to 780 a bushel, this is going to affect the price of food on the retail end of it. Just on the mere fact that we have a disruption in production across the world, transportation problems, logistical problems. So it is unrealistic to expect that we're going to have a normal harvest for grains. And right now we're focusing on the grains because the harvesting season is upon us, and we want to see again how much grain hits the market to accommodate the supply and demand, particularly during the holiday seasons. Corn went up from $3.95 to $7.35 a bushel just since December that you see here. So we're looking at some other markets here where we can see some volatility develop and take advantage of this volatility. Let's go back here to the gold market, and we're basically waiting to see the decision of the Feds, because that's going to be very, very important, and it's going to relate to everything in terms of just the possibility of the cost factor beginning to be affected by a rise in interest rates, which will affect everything across the board. I want to take a look at the weekly report that Nikki the robot published regarding Bitcoin, and let's see what happened here with regards to the AI from Saturday, and take a look at the market after.
Hi everyone, this is Equity Management Academy with the weekly Bitcoin report for October 29, 2021. Summary. The weekly trend momentum of 47,374 is bullish. The weekly VC PMI of 61,735 is bullish price momentum. A close below 61,735 stop negates this bullishness neutral. If long take profit 65,265 to 67,745. Trading instructions. Weekly trend momentum 47,374, bullish. The contract closed at 62,444. The market closing above the 9 WSMA 47,374 is confirmation that the trend is bullish. A close below the 9 WSMA would negate the weekly bullish short-term trend to neutral. Strategy. We are coming in this week with a bullish sentiment unless it closes below 47,374. Weekly price momentum, 61,735, bullish. With the market closing above the VC weekly price momentum indicator of 61,735, it confirms that the price momentum is bullish. A close below the VC weekly, it would negate the bullish signal to neutral. Strategy. We are coming in this week with a bearish price momentum, unless it closes above 61,735. Weekly price indicator. Exit. Longs, sell 1, 65,265. Sell 2, 67,745. Exit. Shorts, buy 1, 59,255. Buy 2, 55,725. Cover short on corrections at the 59,255 to 55,725 levels, and go long on a weekly reversal stop. If long, use the 55,725 level as a stop close only, and good till cancelled order. Look to take some profits on longs, as we reach the 65,265 to 67,745 levels during the week. Strategy. If you are long, take profits 65,265 to 67,745 levels of resistance.
Let's take a look and see what happened here with Bitcoin. We, as the report said, reverted above the weekly 61,735, and it reverted the weekly trend that you see on the left of the numbers are on the left weekly into a bullish price momentum. Also, the price closing above 62,998 activated a daily bullish price momentum. The daily signals are shown live here in the live trading room every day. The weekly signals we published in basically a few different forms, so you can have access to the weekly signals and the monthly signals in preparation for those reports or those signals. And then obviously we trade those signals here live in this trading room. What we're looking at now is basically the market coming down below the daily average of 62,998, and it's neutral. So it's in the zone daily and weekly of the average price, and the artificial intelligence, when the price is around the average, just tells us to stay neutral. Let's take a look at the silver market.
Hi everyone, this is Equity Management Academy, with the weekly silver report for October 29, 2021. Summary. The weekly trend momentum of 25.23 is bearish. The weekly VC PMI of 24.12 is bearish price momentum. A close above 24.12 stop negates this bearishness neutral. If short, take profits 23.55 to 23.13. Trading instructions. Weekly trend momentum 25.23 bearish. The silver futures contract closed at 23.95. The market closed below the 9 SMA 25.23 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Strategy. We are coming in this week with a bearish sentiment, unless we close above 25.23. Weekly price momentum, 24.12, bearish. With the market closing below the VC weekly price momentum indicator of 24.12, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. Strategy. The close below the mean activated a weekly bearish price momentum, unless it closes above 24.12. Weekly price indicator. Exit. Longs, sell 1, 24.54. Sell 2, 25.11. Exit. Shorts, buy 1, 23.55. Buy 2, 23.13. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 23.55 to 23.13, and go long on a weekly reversal stop. If long, use the 23.13 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the 24.54 to 25.11 levels during the week. Strategy. If you are short, take profits at 23.55 area of support.
We can see the market coming down into the buy 2 level of 23.13, which is where it is right now. And also you can see clearly the price is in the blue zone. It's extremely oversold daily and weekly. The daily buy 2 level of 23 is activated as well. We're trading right now around the weekly price of 23.13. One of the things that you want to take a look at is see how the price behavior acts around these levels here that are indicated that basically you should begin to accumulate at these levels. Now, this is technically speaking, regardless of any fundamentals that may be going on or any decisions that are being made. This is completely technical, and it reflects basically any price move based upon some of these fundamentals. And so what we want to capture is the extreme speculation of that decision based on those fundamentals that essentially will drive the price to the extremes above or below the mean. And that's what we look for as a trading opportunity. Look to buy from here, above this 23.13 in silver. We're beginning to see buy-in coming into the market. Gold trading, silver trading 23.11. We're holding into this level of support. There's really not much action today, as again, the markets are a little bit distorted in terms of the expectations with regards to the Fed's decision on interest rates. So it's going to be a pretty choppy day, volatile day, but you can see where the price is in relation to the algorithm. And once again, we are in an extremely oversold condition. The probabilities or the path of least resistance is for the price to revert back from these levels here. Thank you again for the opportunity to share this information with you. And in the meantime, be safe. Take care of yourself here for the rest of the week. I'll talk to you next time.